Hello, I'm Jurrien Timmer, and welcome to the second quarter edition of Timmer Time. So the markets have wobbled a bit in the last couple of weeks, in part because of rising rates, in part because of geopolitical headlines. And after running in a straight line for the last 6 months, up 28% for the S&P, it's not that surprising that the market is taking a breather here. But overall, I think the bull market remains intact. So top of mind, of course, you have to start with the 60 and the 40, stocks and bonds. Stocks remain a very important anchor, of course, for any portfolio. Bonds are, yields are rising a bit, and that is raising some question as to whether that correlation regime has changed. And so that's an interesting thing to keep an eye on. Beyond that, hard assets, commodities, gold, moving in tandem with the dollar, that's something we haven't really seen in a while. So the market remains quite, focused on whether and when and how much the Fed can cut rates. I think those rate cuts are less essential than they were last year, when there were no earnings to offset, the potential for higher rates. Now earnings are growing at 10% per year again, and that makes the market less sensitive or less dependent on those rate cuts. In my view, we're in about the 7th inning of this cyclical bull, and also about the 7th inning of this secular bull. So that tells me that the rallies can continue, but probably at a slower rate of growth. Thank you again for listening, and I'll see you in the next quarter.